If you work a regular job, the government taxes you before your money even hits your bank account. Every paycheck, every bonus, no delay, no escape. But if you're rich enough, you can make millions, borrow against it, live off it, die, and legally pay nothing in taxes on decades of profit. This isn't a loophole for criminals. It's not offshore accounts or secret Swiss banks. It's written directly into the tax code. Let me show you the difference. Imagine you buy a piece of land for $100,000. Years go by. It grows in value. Today, it's worth $10 million. If you sell it, the government takes nearly 40% of the gain. Millions gone immediately. But if a billionaire owns that same land and never sells and simply dies, the tax bill disappears completely. Tens of millions in gains erased as if they never existed. This single rule costs the government tens of billions of dollars every year, and it explains why wealth keeps compounding at the top, while everyone else stays stuck running in place.
Here's how it works. When you buy an asset, whether it's a house, stocks, or land, the government records what you paid for it. That's called your cost basis. If you sell that asset later for more than you paid, you owe capital gains taxes on the profit. Pretty straightforward, right? But there's a loophole so massive that it allows the wealthiest families in America to completely erase decades of investment gains from the tax system forever.
It's called stepped-up basis, and it might be the most powerful tax advantage that nobody talks about. When someone dies and leaves assets to their heirs, the IRS does something remarkable. They reset the cost basis of those assets to whatever they're worth on the day the person dies. All those years of appreciation, all those gains that accumulated over a lifetime, they simply vanish for tax purposes. It's like hitting a reset button on the tax calculator.
Let's look at a real-world example. Jeff Bezos founded Amazon and received his shares for virtually nothing. Those shares have grown to be worth hundreds of billions of dollars. According to investigative reporting, Bezos paid less than 1% in taxes on nearly $100 billion in income from capital gains between 2014 and 2018. In fact, in 2 separate years, he paid 0 federal income taxes at all. Now here's the kicker. If Bezos never sells those Amazon shares and holds them until he dies, all those hundreds of billions in gains will never be taxed. Not by him, not by his heirs, not by anyone.
When his children inherit those shares, they'll receive a stepped-up basis equal to the market value on the day of inheritance. If they sell the shares immediately, they own nothing. The entire lifetime of appreciation disappears from the tax system. Congressional data shows that in 2019 alone, 56% of the benefits from this loophole went to the top 20% of estates. $7 billion went exclusively to the top 1% of the wealthiest families.
The Treasury Department estimates this single provision costs the government over $40 billion annually in lost revenue, with some estimates reaching as high as $58 billion when you factor in all related benefits. To put that in perspective, that's more than the entire budget of the Department of Homeland Security. But how does this actually affect everyday Americans? When billionaires don't pay taxes on their wealth, the burden shifts. The middle class ends up carrying more of the tax load to fund government services, infrastructure, education, and healthcare. According to Treasury officials, there's a $160 billion gap each year between what the top 1% likely owes in taxes and what they actually pay. Here's where it gets even more interesting. Wealthy families have turned this loophole into a multi-generational wealth preservation strategy. They hold on to assets their entire lives, borrow against them when they need cash at incredibly low interest rates, and then pass everything to their kids completely tax-free. The assets get a fresh start with each generation. This creates what economists call a lock-in effect. Rather than selling assets and reinvesting in more productive opportunities, wealthy investors hold on to appreciating assets purely for the tax benefit. This distorts economic decision-making and creates a drag on overall economic growth.
Some defenders of the stepped-up basis argue that eliminating it would be double taxation because estates might also pay estate taxes. But here's the reality. Only estates worth more than $13.6 million face any estate tax at all. That's fewer than 1 in 1,000 estates in America. The vast majority of people benefiting from stepped-up basis will never pay a dime in estate taxes either. They're getting a complete tax holiday on their investment gains.
There have been proposals to reform this system. President Biden suggested closing the loophole for billionaires and millionaires, which would raise an estimated $325 billion over 10 years for public services. The reform would work by treating death as a realization event for capital gains purposes, meaning taxes would be due on appreciation that occurred during the deceased person's lifetime. But these proposals face fierce opposition from wealthy interest groups and their lobbyists, who argue that families shouldn't have the burden of tracking cost basis over long periods, or that heirs lack the cash to pay taxes on inherited assets.
Yet wealthy families regularly borrow millions against their assets when they need cash. If they can borrow for yachts and vacation homes, they can borrow to pay taxes on inherited gains. Meanwhile, average wage earners can't even wait until year-end to pay their taxes. Their income gets taxed before it hits their bank account through payroll withholding. The irony is striking. The system forces working Americans to pay taxes immediately on every paycheck, while allowing billionaires to defer taxes indefinitely and then eliminate them entirely through inheritance.
Perhaps the most frustrating part is that this isn't even a controversial accounting trick or aggressive tax planning. It's written directly into the tax code as Internal Revenue Code Section 1014. It's completely legal and completely available to anyone wealthy enough to take advantage of it. The question isn't whether stepped-up basis is illegal. The question is whether it's fair. Is it right that someone working a regular job pays taxes on every dollar they earn, while billionaires can accumulate hundreds of billions in wealth and structure their affairs so that gain never faces taxation? The numbers speak for themselves. $58 billion in foregone revenue, $160 billion annual tax gap from the top 1%, assets worth trillions passing between generations with ever being taxed. The stepped-up basis rule isn't just a technical detail buried in the tax code. It quietly shapes who gets ahead and who doesn't. By allowing wealth to pass from one generation to the next without ever being taxed, it helps the richest families preserve and compound their advantages over decades. Meanwhile, the cost doesn't disappear. It shows up elsewhere, in higher pressure on wages, fewer public resources, and a tax system that feels harder on people who can least afford it. And unless this structure changes, the same pattern will keep repeating. Wealth moving upward, tax burdens shifting downward, generation after generation. The real question isn't whether this rule exists. It does. The question is what kind of system it creates and who it's really designed to serve. That's what we'll keep breaking down here.